Hello, I'm Ken Hosack, and thanks for joining me on today's video. The subject, where should I invest? As you know, I just started sharing some educational content about real estate investing on social media. I've had several folks reach out to me to continue the conversation, including friends, family, and colleagues. The biggest question I've been asked is, where should I invest? That is an incredibly difficult question, and frankly, it's one of the hardest questions for me to answer. And as a spoiler alert, I'm not going to answer it here. However, I do want to go through my own thought process and criteria and share some thoughts that you might find helpful. First of all, I am not a financial advisor. I'm not registered with the SEC to give advice. If you're thinking about making a major investment decision, seek out advice from professionals. Then give that advice a reality check by reviewing it with other people you trust, especially with other experienced investors. And in both cases, make sure that the people you talk to are knowledgeable and unbiased, and that you're fully aware of any motivations or compensations they might have for giving you that advice. So Ken, I asked you a question, where should I invest my money? The thought of answering that question and giving advice to my friends and family terrifies me. What if my advice is wrong? What if I refer them to an investment that goes bad? What if the person to whom I refer them turns out to be a bad person? What terrifies me worse, however, is when people want to invest in my own projects, when people actually give me their hard-earned money and entrust me to invest it wisely. What if my project has problems? What if things don't turn out the way that I thought it would? The thought of investing other people's money in my own projects terrifies me, as it should. My advice is to first ask yourself, what is your personal investment philosophy? And I've learned this from my mentoring group at the Real Estate Guys. There's some personal questions for you to answer first, and the theme of these questions is to help you measure your own personal assessment of risk versus reward. First of all, age. There's a big difference between investing in your 30s and investing in your 50s or 60s or 70s. Why? Well, some people might want to take higher risks earlier in their career because they know that they can recover if something goes wrong. Some people, on the other hand, might want to take higher risks later in their career because they know that they want more for retirement. It's a decision that I can't make for you. You have to decide for yourself. What about the size of the investment? And when I say size, I don't mean the amount. I mean rather the percentage you're planning to invest compared to your overall net worth. There's a big difference between investing 1% of your net worth into a single investment versus 90% of your net worth into a single investment. It really doesn't matter if you have a lot of money or a small amount of money to invest. What matters is how many eggs do you want to put in the same basket, and you have to decide that for yourself. What about your aversion to risk? Everybody's different. I fly small airplanes and I scuba dive, but I don't parachute out of the back of airplanes or ride on the back of a motorcycle as somebody's passenger. Why? Who the heck knows? Everyone's different. Everyone has different feelings about what gives them joy, what scares them, and where they feel more comfortable investing their money. It's a deeply personal situation. But the bottom line is that anyone thinking about investing in anything should strongly think about their own personal investment philosophy and their own investment criteria, which could be, long-term growth, short-term cash flow, preservation of capital. Does it have a tax advantage I need? Everyone has different objectives, and it's a personal decision. So Ken, what are my investment options? If you've already have your personal investment philosophy and you've reached some conclusions about your investment objectives, you're in a better position to evaluate the various types of investment options for your hard-earned money. Do I put it in the stock market? Do I keep it in my bank? If I put it in the stock market, should I invest it in individual stocks or in a mutual fund? Do I buy gold? Do I invest in real estate? If so, should I invest in my own individual properties, or should I invest alongside other investors in bigger properties through a syndication? Should I invest in a real estate fund that has several properties? It completely depends on your objectives, risk tolerance, and personal investment philosophy. It's a personal decision you have to make for yourself. As an aside, I'm actually one of the few who loves my bank and the people that work there. We all know that inflation is eroding the value of the dollar, and especially cash deposits that you might have at the bank. However, my bank is a local community bank that invests their deposits in commercial loans to people like me. In other words, I like for people to keep some of their portfolio at the local banks to keep them strong and invest in the local community. But it's a personal decision, and you have to make that yourself. So where do I find the money to invest? If you've lived below your means and saved your money, you already know the answer. Perhaps you've had a recent windfall through inheritance or from your company. If you have equity in your house, I know people who have borrowed against that equity and invested it in something with a higher interest rate. It's a little harder to do today with the higher interest rates, but some people I trust believe that's a good strategy. But it's a deeply personal decision that you have to make yourself. Do you have money in your IRA that you want to invest in real estate? Most people don't know that they can do that. Some people I trust believe that's a good strategy, and there's some government-approved QRPs, or qualified retirement plans, that are available to help you. But that's a deeply personal decision that you have to make yourself. So Ken, with whom do I invest my money? This is a very important question. And when I think about the people I trust, I think about my successful real estate mentors and colleagues. They are very skilled and experienced in real estate development, but almost all of them have had deals that didn't work out. The stories they share about those troubled experiences are the ones I treasure the most, especially the parts about what they did to get through the issues and how they communicated that with investors. I like investing with people who have done it successfully through good times and bad, not just the good times. So when you get to that point that you have your personal investment philosophy, you have your investment objectives, you understand which asset types that you believe match those objectives, the question of who do I invest in is often the hardest part. It's a personal decision that you have to make yourself, but do your research, ask a lot of questions, and do a lot of background checks. So Ken, I'll try one final time. Where should I invest my money? As you know by now, I can't answer that question for you, but I can share some of my own beliefs. First, I lost some of my own money earlier in my career by investing in surefire companies that most of you have never heard of, like Netscape, WorldCom, and Global Crossings. I probably should have bet on Microsoft, Apple, and Amazon instead, but the point is that you never know, or at least I don't know who the winners are going to be. As a result of this experience, first and foremost for me is diversification. Diversification in everything. Diversification in asset types. I'm heavy into real estate, but I also invest in stocks, bonds, and precious metals. It's diversification within a given asset type. So for example, in real estate, I'm spread out across office buildings, apartments, self-storage, some residential. Diversification in markets. I invest in my own projects here in Boise, Idaho, but I'm also invested with other people's projects outside of Idaho in several growing states in different regions of the states. I believe in diversification of the people through whom you invest. I use people I trust, but I don't use the same person for everything. When friends and family ask me where to invest, I usually point them first to places to go for education and research based on their current situation. I usually send newer real estate investors to a podcast and website called Bigger Pockets, since that's where I got started in my real estate education. And then for the more sophisticated real estate investors, I usually point them to the Real Estate Guys radio show, which is a podcast hosted by my mentors, Robert Helms and Russell Gray. They spend a lot of time talking about real estate investing, but they also spend a lot of time looking at the economy, interviewing great people to understand how that affects investments. I also point people to Real Estate Espresso, which is a daily podcast, short daily podcast hosted by Victor Menashe, who I also consider a mentor. I point them to books such as The ABCs of Real Estate Investing by Ken McElroy, who, if you know of the book Rich Dad, Poor Dad, Ken is a Rich Dad advisor for Robert Kiyosaki. I've had several short conversations with Ken over meals and drinks at various real estate conferences, and his advice has strongly shaped my own investment decisions and my current development projects. So although I didn't directly answer the question of where you should invest, hopefully I gave you some good pointers for how to approach that difficult question, as well as where to go to learn more. Thanks for your time, and I hope to see you again on our next video.